All right, today I'm going to go over natgas and see what's going on. Why? Because although it's in a downtrend, it had a breakout. It had a breakout, very little, if any, fall through, but there is some bullish activity. Still, the trend is down, so it can easily go back down. All right, but we just need to kind of know where it is and all the opportunities that it presents. So we're taking a look at it, and we see that as the price was making this low, you had this breakdown over here, and then finally you had a reversal that took out the high and broke out above these two swing highs, and now pulled back. So that's the situation on the daily. Now we'll chop it up and take a look at the volume activity and see on the tapering chart that during this bounce, we had 90,000 contracts. Why 90,000 contracts were taking out the prior high? So maybe there were stops there, maybe who knows what was there, but the point is the buying pressure came in and broke that area. As it broke that area, it continued to go higher. As it went higher, what happened? More buying activity, more buying activity. Eventually, buying activity stopped, and you had a pullback right into the 90,000 and contracts, where you had a bounce. Okay? All right, now that tells you the situation. All right, downtrend has this big wave. That big wave has strength here and had fall through and then pulled back to that same area where the prior buying activity. By the way, this now, if you want to know, like the Wyckoff term for this is actually creep now. All right, this is creep because it's the high before the low, which was broken by breakout volume, and just came back to pull back and test that creep. All right, now the only thing is we haven't established an uptrend, so it's, you can call it creaking and downtrend or whatever, but this high was broken and got tested right now. So pull back. As it pulled back to that area, you have to be careful because these buyers, they'll step in, or at least that's where they're anticipated stepping. So now let's take a look at the medium time frame. In the medium time frame, the market pull back. It's going to this origin. This origin, very, very important. All right. Why? Because you had a high. You had this rally, pullback rally, right? And now we're going to see its origin, how strong it is. As the market comes back down, we're at this point here. And we take a look at the tapering chart. And what do we see in the tapering chart? Well, the initial selling here was 26 down. This column has a good amount of volume, 2.5 times the average volume. It had 26,000 contracts. Why? Because we're breaking the low. Just think of it as breakout volume, or breakdown volume in this case. It goes down, okay, then it goes down again. Now here's the situation. When you have that volume and it's not, and it reverses back up like that, you have to ask, what is this volume? Here we know it's breakdown volume because it's breaking this low. Here you have this breakdown volume, but then the market immediately goes up, and what happens is they bought the breakdown, accumulated the breakdown, and rallied it back up. And the 52,000 came as a result of taking out this 26,000, and you had buyers basically press it back up, and that was the biggest volume, 2.3 times the average up, 2.3 times the average volume on the upside. Okay, so what is all of this telling us? It's telling that there's some struggle here. There's some selling. Buyers come in, buyer push it back up, down, with volume, selling and buying, selling and buying. Now, how do you make use of that for trading? Well, where was the strength on either side? All right, sellers here got taken out. So the 26,000 got taken out here. Where was the origin? Right here. Why? There's 35,000 and 16,000. Those are pretty big prints. 36,000. And then 35,000 and then 16,000, followed by that higher rally, and the biggest volume, bigger than 2.3 times average volume. So now you want to take a look at what happens when it gets tested. And as it got tested, As it got tested, guess what happened? 22,000 contracts came in. All right, right here where you're 35,000 and 16,000, you wait, let the market pull back, and see if there's reaccumulation. Here you have 16,000 and 35,000, followed by a green rally, green column of volume, which is the biggest volume on the chart. This is definitely an important area. Why? Accumulation, markup column, getting retested, markup biggest volume on the chart, visible area of the chart. So it gets tested. As it gets tested and the market comes to the origin, right, or aka the demand zone, you take a look at what's going on. Here you clearly see it goes down, up, down, up. What's going on here? What's going on here? What's going on in this area? This area is that accumulation of 22,000 contracts. This area is the accumulation of 22,000 contracts in these overlapping bars. Why? Because they'll keep it in a range. This is that little range in which the accumulation occurs. And as you know, many times after accumulation, you'll have a fake out and a reversal. That's what this is. It's actually, shakeout and reversal, if you want to call it that. This is the accumulation. This is the breakdown. This is the false breakdown, right? On a significant amount of volume, followed by a significant amount of volume right back up. Why? Because it's a shakeout. That's how shakeouts work. If you analyze shakeouts, whether they're in a major scale or a minor scale, it's the same thing. They go down and they come back ferociously with all of the buying strength and all of that. So as you can see, it came back with a big range, big volume, and had a rally. So we know that this was some type of intraday or reaccumulation, followed by a fake out and a rally back up. So what to expect now? That's the thing. I mean, I'm not going to touch this thing until it breaks this area and reestablishes the uptrend, at least on this time frame, right? Because on that medium time frame, it has lower lows, very clean lower lows. So the idea of going long is not a smart idea until at least it has to make higher highs, a rally higher high. And right now we have lower low. So yes, this was a bounce. Yes, there was accumulation here. This area was accumulating, someone accumulated, which caused the rally, got retested, it came back in, created a bounce, all of that. But until it takes out some of these highs and establish an uptrend, if it does that, then it's game on for the longs. Until then, there is a low, up, down, up, thrusting, going back down, lower high, lower low, etc. So the game is still on the short side, but caution. Why? Because someone bought these lows here, creating this pivot, and they re-entered on the test of the origin, or that near that area again. And I wouldn't be surprised if they take out this high, the 2.228 right here. So that's the idea. Still, they would have to break, go make a rally before I consider longs. All right, that's it. Thank you all. Have a good day. Bye.